Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. With the stock market near all-time highs and many parts of the economy still strong, many investors are wondering about the health of the U.S. consumer. In the next few minutes, we'll talk about how consumers are faring given the strong job market and what this might mean for economic and market trends. First, let's take a look at how we measure the size of the economy. GDP, or Gross Domestic Product, is broken out into consumer spending, business investment, government spending, and the trade balance. Consumer spending has increased as a share of GDP over the last 20 years. Meanwhile, government spending has declined. Business investment is still about 18% of spending, but has fluctuated quite a bit on a quarterly basis. Thus, it's easy to see that consumer spending is the backbone of the U.S. economy with 68% of total expenditures. How consumers feel, whether they are willing to spend on everyday goods and services, as well as big-ticket items, has an important impact on the overall economy. Second, this chart shows the University of Michigan consumer surveys. What you can see is that consumer sentiment fell in 2022 due to high inflation, a rocky economy, and a bear market. However, sentiment has been rebounding since then as inflation has improved. The same survey shows that consumers expect only 3% inflation over the next year, which is a significant improvement. Another period of time to highlight is the decade following the 2008 financial crisis. Consumer sentiment was low for years based on the poor job market. In fact, many gave up looking for work during that time due to the housing bust and falling manufacturing activity in this country. In many ways, today's environment is the opposite. Even though there are many economic concerns, the job market has been remarkably strong. Unemployment is only 3.7%, one of the best rates in history, and wages rose over 4% during the past year. While there are layoffs in areas such as tech, the fact that most people have jobs is helping to keep the consumer strong. Finally, while consumer spending has been strong, there are signs that these trends could slow. Households are spending much of what they saved during and after the pandemic. The national average savings rate is only 3.7%, which is well below the historical average. This chart shows that retail sales have also decelerated, even at online retailers. This could act as a drag on the overall economy in the coming months. Still, the fact that consumers have been strong has helped to keep the economy out of recession and boost the stock market to new all-time highs. Investors should keep this in mind as they assess the market situation for the rest of the year. We hope you found these insights valuable. If you have any questions on these or anything else, please feel free to reach out. We look forward to speaking with you soon.